Hi there, it is Bobbie Jo, and welcome to my very first podcast, Real Talk with Bobbie Jo. I'd like to give a huge shout out and thank you to the Old Cannery Furniture Store. It's in downtown Sumner and partly in Puyallup because it's so big. But I would like to tell them thank you so very much for offering for me to use their space to try out our podcast. So thank you so much, Old Cannery. If anyone's looking for any new furniture or want to refresh in a room, the Old Cannery is definitely a place you want to start looking. Today, I have a guest with me. Her name is Traci Skinner. She's one of my preferred lenders, and I was going to just run through some lending questions with her and just help you walk through the process of what it looks like to get a home loan. When someone reaches out to me and they're wanting to buy a house, the first question I ask them is, have they been pre-approved?
The first thing, before we kind of bombard them with a lot of factual questions and a lot of that boring stuff, I kind of just talk a little bit and find out a little bit about them and kind of what they're thinking about. And when we kind of start talking about first steps, there's some people like to do everything by text and email. Some people want to see the whites of my eyeballs, and some people want to just do it over the phone. So we kind of figure out, what's the best way for them to get started that way. And after we decide which way they want to proceed, then really after our first initial kind of get to know you conversation, that's where we kind of get into what I tell them is this is kind of the boring part of it, where we have to kind of collect data and fact check and do all that kind of stuff. So we send them what we call a welcome email, and we try and make it as Fisher Price easy as possible. Just, 1, 2, 3. Just click this link to apply. Unless we're doing it face to face in person, that's different. But a lot of people like to do the online application, even if we're going to meet face to face, because then I'll have all of my information ready when we sit down to talk together. So the first bullet point is usually click this link to apply online. And then the second one is gather the financial documents listed below. And then there's a secure link where they can click on and just drag and drop their financials. So once we have their application and their financials, then I tell them, okay, this is where I kind of step away for a minute. I put my Dateline detective hat on and we structure, what all the different options are, because most of the time people have more than one option. There's a lot of different ways to structure loans, even for first-time home buyers. And then that's when we kind of circle back around and sit down and talk about the different options and kind of the pros and cons of them, and talk about the differences and really kind of try to give them a feel for what the rate versus the monthly payment versus the cash to close and what all that stuff looks like. We really try and challenge people to not get super rate focused and to kind of shut out the noise of all the people around them that try and give them unsolicited advice about, what they're supposed to do and who they're supposed to talk to and what they should be, and just kind of really focus on what is settling well with them. Right. And then once we have it narrowed down to a few different programs, that's when the fun part starts. And we loop you back in and we go, okay, here's our sort of parameters. And then once they start kind of seeing properties from you, then they'll send those to me, even if they're not going to tour, even if they're not going to make an offer, even if it isn't the perfect property, if it's in their general geographic area and in their general price range, we like to do side-by-side estimates of the different options because they don't always know right away which option is best for them. And when they're looking at the estimates side by side, I tell them, and we've seen this over and over and over, where the right answer for them just kind of naturally bubbles its way to the surface, right?
For sure.
Like we'll have, very recently, we had some buyers that were looking at down payment assistance versus not down payment assistance. They had their own money and they could very easily come in with their own down payment and get about 0.5% better in interest rate. Well, after about, I don't know, maybe they looked at 6, 7, 8 estimates. They finally emailed and said, you can from here on out, just send us estimates for the down payment assistance. They just knew. They were like, we know they're more sensitive about keeping their money in the bank than the interest rate and maybe a slightly higher monthly payment. And they didn't know that at first. At first, they probably were like, I want the lowest rate. That's what everybody walks in the door saying at first is I want the lowest rate. And sometimes that is where we land, but sometimes it also isn't where we land. And the only way to get there is by continuously exposing to estimates and the difference in houses. I mean, property taxes are going to be different for every house. Some houses have homeowners association dues and other ones don't. Different property types have different interest rates as well. If we're looking at a manufactured home or a condo or a single family residence. So that's kind of the, from first meeting to shopping, that's kind of the process.
So when you send in the application or they go online to fill out the initial application, what are some things that they can expect to answer in the application process?
That's a great question. So I tell people, because they get a little intimidated, they feel like they might break it or, what if I put the wrong information in there and they really can't break it up front. I tell them this is just to get a digital footprint started. What we really want in the application is name, address, date of birth, social security number, address, current address. Then we're going to want a 2-year residence history and a 2-year employment history. Basically, generally where your bank accounts are at, and what investments and retirement accounts you might have. That's really pretty much it. There's some declaration questions. But I've had people that, if they make $90,000 a year, sometimes they'll put $90,000 a month on accident, right? Or they'll put, it's honestly, once it's submitted to me, I will then get on the phone with them and go through it line by line just to kind of verify everything anyway. But everything up front is preliminary and constantly changing. And it also asks them, what address you're buying. Well, of course, we don't know that right now. Mm-hmm. How much do you want to borrow? We don't know that right now. We don't know the rate. We don't know the program type. There's a lot of things in there that I tell people, if you're not sure, skip it. We're just looking for the meat, right, in the upfront application. And then just fine tuning the details over after that.
And I have a lot of times people will ask me, I'm going to be ready to buy, I'm looking to buy maybe next September. So, it's way too early for me. And I always tell them this is a perfect time to connect with my lender, because if there's any issues or things we need to work on, we have plenty of time now to work on it or to put you in the best strategy to have the most buying power.
Yeah. Well, and we now have this really cool feature, and this has just recently come about, like in the last year, where we can do a soft credit pull and we get all 3 bureaus and it's not a hard hit.
And can you explain the difference to that? Someone who doesn't understand between a hard and a soft?
Yeah. Soft pull is just kind of it affects the credit differently, right? Mm-hmm. And when you do a soft pull, it doesn't actually alert all the bureaus. But when you do a hard pull, that is an actual inquiry that posts on your credit report. A soft pull is just a peek, and the hard pull is the actual throw the curtains back, right? But the soft pulls, they used to only pull 1 bureau, and that's just not accurate enough. There's too many things that can pop up on the other 2 bureaus that can be not so fun surprises. Mm-hmm. We don't like surprises in real estate. So we weren't utilizing those soft pulls. But now that it grabs all 3 bureaus, people don't have to worry about the excessive inquiries or the fear of that, right? And inquiries for mortgage, they don't drop your score. Like, people talk about the excessive inquiries and the fear of their score dropping.
It's a pretty common misconception.
It's a common misconception. When you have a mortgage inquiry, it looks like you're shopping for a house. When you have an auto inquiry, it looks like you're shopping for a car. Neither one of these are risky behaviors, right? So multiple inquiries with those things, they don't drop your score. Now, if you apply for 4 credit cards in 3 days, something's up. and your score is going to drop. The type of credit you apply for matters.
Okay.
Right. So unsecured, revolving credit like that, it's been shown that people apply for a lot of credit cards right before they're in financial trouble, or there's some type of event like a job loss, or the roof needs replacing, or the car just blew up, or, that's the kind of thing that's indicative of potential financial events. And that's why those type of inquiries will drop your score, to warn future potential lenders that something's going on here.
Okay. Yeah. So let's have a scenario. Let's say we have a first-time home buyer. They've been renting for 2 years, have had the same job for 2 years. Mm-hmm. What would their minimum credit score need to be in order to apply for a home? I know they can apply at any rate, but at what point, what credit score are they thinking like, I'm ready to go apply for a house loan?
Generally speaking, across the board, I'd say a 620 is where, the minimum for most loan programs that you'd need to be. But there's a lot of latitude with manual underwriting right now. And I would, especially for people that are in the challenged credit scores, I would not want them to wait, because coming back from challenged credit by yourself without any direction from professional assistance is really, really, really hard. Speaking from personal, experience, not having any guidance with regard to credit at a very young age, and, kind of messing things up and then fixing it later. I like to help people, when they're in those types of situations. So getting together with somebody and not being ashamed or embarrassed about that is really important.
Oh, for sure. I think in that category, you're my preferred lender, because one, you make people feel comfortable, which I appreciate. Thank you. Mm-hmm. But also, I always will tell people, like, don't go and search for a credit repair company online. Like, please call my lender and she'll put you in contact with someone who mm-hmm. is reputable. Yeah. Because there's a lot of scams out there, right? Yeah. That will just take your money, but they don't actually fix your credit.
Right. There's a lot of places that they just do spray and pray letters, right? They have form letters, and they'll take your money monthly, and they'll hope for the best and just throw out these letters. What a lot of the generic credit repair companies will have people do is they'll recommend that people, if they have any kind of derogatory event on their credit report, they'll recommend that they just call the bureaus and dispute that particular account. But it works temporarily, and people see their score go up right away. And the reason is because it basically hides it from the credit scoring mechanism. It makes it invisible. So it's just like I said, like you throw it in the corner and you kind of hide it, but it's not seeing it. It's not recognizing it. So there's different rules around having disputed accounts, but generally speaking, you can't just ignore a derogatory event. Now, there are other rules now to where if that account has a zero balance, we can leave it in a dispute status. But a lot of times these are bigger ones, like collections, medical collections, or different type of charge off or collection accounts. And if it's several $1,000s and these people don't have the financial ability to pay it to a zero balance, then we have to take it out of dispute status, which immediately drops their score. So that recommendation from your standard generic general credit repair company is not necessarily sound advice. It's a temporary fix, makes people feel like their score's going up. But then as soon as they meet with a mortgage lender, an underwriter is going to look at that file and say, you can't just pretend this never happened.
For sure. So for anyone who doesn't understand what underwriting is, can you explain what the difference is between your job and then the underwriter?
Yes, absolutely. So when somebody first gives me verbally their information, they say, well, I think my credit score is 750 and I make $95,000 a year and I have an auto loan of $250 a month and I have this much money to put down. Well, we can generally do some rough calculations just based on that. from just a conversation, I can tell people, well, I think you'd be pre-qualified. That's about the lightest, loosest approval that you can have, just a general conversation, right? From there, the next step is a pre-approval. And that's where after they've applied and after we've run their credit and after we've reviewed their financials, I, as the loan officer, feel strongly that they are pre-approved. But I'm not the one that signs the check and approves the file. It's the actual underwriter, right? So we take it one step further and we push the file through to underwriting because the underwriter's job is to protect the bank. I'm kind of the advocate for the borrower, and the underwriter's job is to make sure it's a good risk and a good fit for the investor. So they're looking at it from a little bit more of a critical standpoint where I might analyze the income one way, the underwriter might analyze it a different way, more conservative way, especially when you're talking about variable income or bonus income or overtime income or commission or self-employed or, those more unique types of income.
For someone who has child support, I know we've ran into that several times, and
yes,
the child support actually counts as their income.
Right. And people will come in and go, I make $100,000 a year. Well, 20,000 of that's child support. The child is, 17 years old. It doesn't have a 3-year continuance. We can't count any of that because it doesn't have that 3-year continuance. So it's really important. And that's loan officers overlook things. It's dangerous to go shopping with just a loan officer's approval without full underwriting approval. There's more mortgage companies are getting to the point where they'll pre-underwrite files for people that don't have a property yet. But most mortgage companies won't have an underwriter get involved until you have a live contract because it's a lot of work for an underwriter to fully underwrite a file. I mean, every application that comes in, not everyone buys a house. Mm-hmm. So that's a lot of extra work on the underwriting team. But it's important,
Yeah, I said the majority of the people that we work with together are underwritten approved. Mm-hmm. And I have to say on my part, when we're going to shop for the home, it really puts us in a stronger buying position to say that we're underwritten approved. For one, we can close a little bit earlier because we have already done a lot of that legwork up front. Mm-hmm. And then also we can be out shopping with more confidence, knowing that, there's not going to be that surprise because the underwriter has looked at the file already.
Well, I know there's been times that where we're competing with other buyers and we haven't been the highest, but we for sure have been the strongest. And plus with your negotiation skills and full underwriting approval, that's really given us some bargaining power because the last thing a seller wants is a sale fail.
That's sure.
Horrible for them. So, the listing agents and the sellers, they really like those full underwriting approvals.
And it's nice as the real estate agent too, to go into a contract with confidence. Like when my client writes the offer, I'm confident we're going to be able to achieve this because one, we had you look at the numbers beforehand. So I know my client is going to be comfortable with the payments and they're fully aware of what it's going to be. And I know that they have gone through underwriting majority of the time. And so I know that, this is a slam dunk because if you like the house and we win the contract, meaning that they accept our offer, it's like, the rest of it's smooth sailing from here. Yep. So that's a really comfortable position to be in too as a buyer. Like the most stressful part is just getting the contract accepted. But once we're there, it was like, oh, I can rest now because I know Traci has it.
Yeah.
It's a really comfortable position to be in.
Yeah.
And then also I have to say that I appreciate that you always call the other realtor. So I may tell you that we put an offer in. I appreciate that you call and you help sell my client and let them know how qualified they are. I think that's a strong tool to have. Sure. Absolutely. So let's go back to the first-time home buyer. Say we're sensitive and we do not have a whole lot of down payment, but we have a good job. We have good income. We have a good history. Our bank statements all match up. Everything's looking good. And what would be some recommendations to you if I don't have, say I only have a couple $1,000s saved for down payment, but I really need to get out of this rental because the rent's going up. What would be some options you would have for me? There's
a lot. And people sometimes don't realize that we can actually even sell an asset for things that you have around the house. We had one buyer that had some wheels in his backyard that ended up being worth $4,000.
Holy Hannah.
Yeah. So that was an interesting one. A gift, you can get a gift from a family member or a close friend. Employers can sometimes help out with gifts. There's the down payment assistance program, and there's a wide variety of programs within the down payment assistance program. And you don't necessarily have to be a first-time home buyer to use the down payment assistance program. And you don't necessarily have to not own another home. You can own one other piece of real estate and still use the down payment assistance program.
That's pretty cool. I didn't know that.
Yeah. So we had one person that when they were selling their house, they had enough equity to put a down payment on the next one. But they used down payment assistance for their first home purchase, and they liked it so much they wanted to do it again. They kept their equity, their $25,000 or whatever they had gotten out of the sale of their home, and used down payment assistance again for the next home.
Wonderful.
So, yeah. And there are some down payment assistance programs that are a gift or a grant that you don't pay back. And some of them have nice, really low interest rates. Those ones are, they have some pretty tight income restrictions, or if you have a disabled family member, or there's some BA ones. There's some different ones that have really low interest rates that are a little bit more restrictive, that require that you count the entire household income. But the big ones, the major ones that we use most of the time, we don't necessarily have to include the entire household income. So for example, if the income restriction is, I think for down payment assistance now it's $180,000. If we've got one spouse that makes $150,000 and another spouse that makes $75,000. So technically we would be over those income limits. If we qualify with just the $150,000, then I don't need to even include employment or income for the second spouse. And I can still have them on the application. I just don't need to count. It's qualifying income, not necessarily household income.
Nice.
So we can be creative there as well to fall within it. Most of those programs are a trade-off of a slightly higher than market interest rate for the down payment assistance. And those ones you do repay, but they're 0% interest, no monthly payment. It just kind of sits as a loan on your home. And when you either refinance or sell, you pay back the exact same amount you borrowed. It's the cheapest money you'll ever borrow.
Wow.
Yeah.
Is that a government backed loan then?
It's a Washington State Housing Finance Commission. So they're bonds that they're funded by different investors.
Okay.
And they've been around for longer than I've been in the industry. So for longer than 20 years. So only one time in my career did they ever run out of funds.
Okay.
And that was during the market meltdown times when things were really hairy, scary for a couple of years there. So there was a lot of weird stuff going on. That wasn't unusual during that time. But again, sometimes when we have people put those programs side by side, a higher interest rate versus a lower interest rate with them coming in with their own money, it's attractive to not have to write a big giant check at closing. And sometimes if we have somebody with no money, they don't have any money for down payment or closing costs, then we put them in with the down payment assistance program and we say, hey, Bobbie Joe, the only way we're going to be able to do this is if we negotiate a seller credit, which is additionally challenging for you because
but we make it happen.
We make it happen. Mm-hmm. We just got to find the right property, the right circumstances, the right seller. And it's a little harder, but it can be done.
That's why I always feel like if there's a will, there's a way. It's like, and the first step to finding the way is getting pre-qualified. And then the next step is find the property. But yes, it's an exciting but stressful process. I feel like when you have the right people behind you, I feel like it's we take a lot of the stress out of it for them.
Yes.
And I think the whole thing too is like just really informing the people through the process.
Mm-hmm.
And so it sounds really scary to get pre-qualified. I feel like anyone who's remotely thinking about buying a home, I would encourage you to reach out to me and ask me for my lender's information. And it would be great to put them in contact with you to find out if it's a process. But if you have, I feel like in our area, the rent is so expensive right now.
Yeah.
And when you look at what the rent is and neighbor it to what the house payment would be, I feel like in some scenarios, it's almost cheaper to own a home or you might need a roommate for a while. Like that's what I told my son. Let's use Austin for a little bit for an example.
That's a great example.
Yeah. So Austin, our son, he recently graduated from college, and I was just going to share a quick trick with people that we had added him to our credit card because he's never had a credit. He does have a bank account, but he never has ever had credit. We always had taught him, pay with cash, and he also likes to keep his cash in the bank, in his safe. We call that mattress money. So when we added him to our credit card, we added him as a designated card holder, meaning that he could technically call and make any changes on the credit card account. And, but we added him as the designated card holder. We had put his social security number down, and he would absorb any credit we had. And in addition, like if he were to make mistakes right now, he could, ruin our credit. But when we did this, he absorbed our credit score and our credit history. And I remember you saying to me, everything looks great, except for Austin's had an over 800 credit score since he was 25 or since he was 5.
Since he was 5. He was born in 2000 and this account was open in 2005. Mm-hmm. I was like, there's no way an underwriter is going to say, he's 5. How is this his credit? But this is one of those scenarios where conventional financing, and if you run it through the automated underwriting system, right? That's the electronic approval. If you can get an electronic approval, if you don't get electronic approval, you got to go this way, and it's a much tougher path. If you get an electronic approval, you go this way, and there's a lot less pressure on the underwriter to pick things apart. And because Austin had great credit, the great credit history, the great credit score, his employment, he had, even though he was just out of college, he had employment history, his college history, had a great job, great income, and all of that stuff put together. And he had his couple bucks in the bank. He wasn't using down payment assistance, right? We didn't have that extra layer of, he came to the table with some skin in the game, and that relieves some stress on as far as the risk factor of the loan. So yeah, it was automated approval. And I remember kind of prepping Austin for the possibility that he might have to wait a little while and we might have to get some additional blah, blah, blah. And it sailed through underwriting, approved. That was great.
But part of that was in the preparation. And so when we first sent him to you to get pre-approved, I remember you saying about the college for him, if he happened to intern with the same company he ended up getting a job with. So we were able to count that as continuous income. But in a situation, say we have a nurse and she is going to nursing school and gets out and gets a nursing job.
Yep.
In that scenario, her nursing school would also count as continuous income time. Is that correct?
As employment history.
Employment history.
So some people think I just graduated, I need 2 years work before I can qualify to buy a house. Not necessarily true, because if you have employment that relates to what you were going to college for, even if it's loosely related, right? Like a business degree and you're doing anything, then that's, related to business. So that counts in lieu of employment history, right? Where the lender wants you to be seasoned on a job, it's if you're self-employed, then of course you need some more season history to see what's going to be stable and consistent going forward. If you have any type of variable factors to your income, if your hours are varying, if your hourly wage is varying, sometimes people get prevailing wage, or nurses is a good example. They get paid different on the shift differentials for the weekend. Those kinds of things sometimes do need more of a history so that an underwriter can determine what's going to be stable and consistent going forward. But yeah, the college time spent counts as in lieu of employment history. And a lot of people don't understand. They sit back and wait and lose market time because they're thinking they have to be 2 years in their field first.
For sure. Yeah. That's where a misconception comes to, like when people ask me, when is the right time to buy? My feeling is always like now, if you've been pre-approved now, because even in our worst economy, our worst years, we still appreciated by 3%. And if you're renting somewhere, you're gaining nothing. So in our worst market, you gain 3%. And what that means for someone on the sidelines, each year you wait, the houses are going up a minimum of 3% each year. Mm-hmm. And then I know you have another perspective on this.
Yeah. Yeah. When people ask me, over the years, that's a common question. When's a good time to buy? For me, I just tell them when you can and when you find the right house, mm-hmm. right? And some people, a lot of our first-time home buyers don't remember the market meltdown. But some people that remember the market meltdown and have a little bit of fear still associated with what happens if that happens again. My advice to people there is find a home that you can wait it out. If that happens again, we're purchasing our home for shelter and comfort, and hopefully it'll turn an investment for us, right? But even the people in 06 and 07 and 08, when market values were plummeting and dropping, and there was foreclosures and defaults, and there was all that stuff going on, the people that waited it out were handsomely rewarded when the market started bouncing back in 12 and 13. Look at what happened in 14, 15, 16, mm-hmm. all the way through 2021. I think it was when there was a lineup of 10, 15 people deep for every house.
For sure.
So many offers. So if the people that had a problem were the people that were relocating or divorcing or had to sell, or lost their jobs, or whatever the case may be. But if it came back every time, and people achieved a ton of equity after the market bounce
I agree.
back.
I would say that you're talking about the selling part during a down market is like when we're in a down market, I feel like the rental need gets higher because mm-hmm. more people are leaving the homeownership but they're needing rentals. And most of these people have great income or great jobs. They just couldn't afford that house or that loan they were in. And so my advice to you would be, if you were a person who's like, the housing market's horrible right now, but I need to sell. I would encourage you not to sell. Let's mm-hmm. hold on. Let's not sell our stock while it's down. Right. Let's hold on until it's back up. And, I can help guide you to rent this home out for a while. Mm-hmm. Obviously some situations you absolutely have to sell mm-hmm. it. I mean, I understand that too, but if it's possible, I always would encourage you to rent it and let's hold on until the market's up. But back to the lending perspective though, when someone comes to you and is applying for a loan, how long does it take for them to usually get pre-qualified? So say that, all my ducks are in a row. Mm-hmm. I'm just trying to get qualified for a home. I found something I liked. How long should I expect this process to take?
We've done it as quick as in just a couple of hours, and having people, excuse me, out there, shopping. We had those little VA people. They met me at my office that morning, and they were out shopping that afternoon because they had all their paperwork. Everything was all in line. And so it can be really as quick as a couple hours or 24 hours. And sometimes it can be as long as a couple of weeks, just depending on the complexity of the income. If there's a lot of employers in the last couple of years, sometimes we have to chase down former employers to get employment verifications. So that's another reason why we kind of want to get all that boring, stressful stuff done up front so we can focus on, the fun stuff after that. But yeah, that's a great question because I get asked that a lot. How long does it take? And it really totally depends.
That's why I like to send people to you earlier, because I want them to make sure they have plenty of time to get all that figured out before we're shopping for homes. Mm-hmm. It's like, I always also don't like to put the horse before the cart, meaning, if you're shopping for homes first, I don't want you to be shopping for houses that are out of our realm, or maybe we're shopping too low, or right now with interest rates being so high, it really does affect the affordability of the price of a home. So, and especially with first time home buyers, I always say, like, if we can find something a little bit ugly or a little bit stinky, is awesome, because not everyone's going to put an offer on it. And those things are easy to fix, especially when they're cosmetic. So if we find a house that's in a nice neighborhood and you walk in and it smells like indoor dog urine, my radar is going off like, this is the great one. Like, this is perfect for us.
Yeah, everyone else is going to be passing on it.
And those are the ones more likely we can get the seller to pay some concessions, meaning help pay for those closing costs and less money out of pocket. So when I see those ones, I'm like, I'm excited. So I think that's where my specialty is helping, people figure out like what might be too much or too little. Like
my very first house, we now affectionately refer to as the goat shed because it was so tiny. And, but at that time it was the greatest piece of earth going for me. I just loved it. But it was small. It was not in the greatest neighborhood, but 5 years later, I walked away with a check for $25,000 that I put down on my next house. And, that's the American dream right there.
When we found Austin's house, it was a beautiful Rambler, which is a 1-story house. We had a lot of moss on the roof. And then when we opened the door, it was horrible smell of dog urine. But when we saw that for us, my husband and I, went on the tour with Austin, and we're like, money,
bingo,
money.
I think he paid $475, and I think it appraised for $550, didn't it?
Yep.
And crazy. Yep. I mean, instant equity like that, just because it didn't have street appeal.
Yep.
I mean, yeah.
So he did have to put a new roof on right away. So we just did the roof recently, but it's amazing. Like I'm so excited for him. My hope is that he'll always will hang on to the house and he'll pull the equity out to buy his next house, but he'll keep it as a rental. But children don't always listen to their parents, so we'll see what he decides to do, because it is his to do it with it. So I'm excited for him to have the opportunity. Yeah. And going back to that about home ownership, I mean, home ownership is the path to financial freedom, and when you leverage yourself right and you're working with the right lenders, it's not always, you don't always have to sell that property you have in order to move on to the next property. There's different avenues. And sometimes I'll go to listing appointments with people and I'm listening to their story and I'm like, are you sure you want to sell? Like, I think that it might be a potential to hang on to this one, but I'll send them to you and I'll have them talk to you about it, the aspect of, renting versus selling it. And, sometimes it works out for them to be able to keep it. And sometimes it's better that they sell it and go with a plan B. Yeah. I love your honesty with our clients. And I love that you'll look at that aspect for them too. Yeah. And for me as a real estate agent, when I go to a listing appointment, I don't know very many other real estate agents who would talk someone out of selling their house, but it's not what's best for me. I mean, for me, and I'll tell them that, like, for me, I'll make more money if I sell this house and help you buy another one, because I'll be earning 2 commissions, but it's not in their best interest, if that's what if they're wanting to get rentals. So
that's a great example of just doing the right thing by people. For the right reasons, it always ends up being much better for them. And it's funny when you sit down with people and they tell you what they want, but then after you have a long conversation with them, they don't really understand fully. Oh, didn't even think that was an option, right? Talking it all the way through and how you can kind of unlock some of their hidden desires or some of the things that they hadn't even considered as a possible. I just thought I had to sell my house.
For sure.
Didn't even know that was an option, of retaining this one, using down payment assistance to buy that one. Who knew that down payment assistance allowed you to not only not be a first time home buyer, but own another piece of real estate?
For sure. Well, I didn't know that until today either. Right? Yeah, I've been in the game for a long time. I think the biggest part of buying a home is aligning yourself with the right people. And, I count on my lenders a lot and my insurance people to make sure we're just making the process as smooth as possible for someone. But when I give someone to you, I'm counting on you to find the best product that fits their needs. And then when they come to me and they're pre-qualified and I know what their options, then it's my job to find the best house for that price or whatnot. And another misconception I feel people have is they feel that, if they're approved for, $675, they have to spend $675. And and they'll get they'll see what the payments are and they'll get a little bit hesitant, and I'll be like, no. Like, we don't have to, but at least now we know you have that buying power. But if you're more comfortable in the 400s and you're comfortable with doing some renovations or buying something a little ugly, we can go to plan B. It's okay.
Yeah.
So it's just knowing their options, I think, is the biggest part. And yes. And you do such a great job putting people in those right categories. And I really do think we make a dream team.
Yeah.
Yes.
And it's so important that that's a fluid part of the process, because not just because getting contract to closing is important, but it just makes it a good experience, I think, for the client, and just knowing that all aspects of it are taken care of and it's a smoother process. And there's so much behind the scenes stuff that you and I do that they don't even know about. Like, they love this house, and then I'll go, what's the deal? What options do we have? Is there any chance we're going to get any seller credit? We'll kind of strategize a little bit so that I'm not presenting something to them that's not even reasonable or possible for that particular property. So in that regard, I can't understate the relationship, the lender-realtor relationship enough, and how beneficial that is for the buyer-borrower, right? Somebody that comes to me with some random realtor that I've never heard of because someone else referred whatever. Those are kind of scary, actually, because we don't know each other. They don't know. I mean, I've had situations where all of a sudden I'll get a purchase and sale contract, and I didn't even issue a pre-approval letter. I'm like, where did this come from? How do you know the terms? How do you know what we need, or how long we need to close, or what, any of those types of things. So that fluid relationship is really important.
Absolutely. Absolutely. I like too that you touched on the relationship aspect, because it is imperative to have good communication. And when you are talking to a realtor and are saying, I like you to get pre-approved with my with my partner, with my lender partner that I work with, when they have a relationship with their lender, it's wonderful, because I know I can call you on the weekends. I can call you late at nights. And if you're just calling a bank, they're not going to be answering the phone like that.
For sure.
Or I'll run into situations where my client may like something and it's a little bit outside the box of what we were thinking. And I'll call you and we'll hash it out, at 11 o'clock at night sometimes. But then in the morning, we're fresh and we're ready to go. And we're through some of those hiccups.
Yeah.
And when you have someone who has a really close relationship with someone, like, I don't call Traci all the time, super late at night. My husband does like to cut me off at night. Sometimes I call in the closet.
Yeah. I'm on my watch.
We have done that before, but when you have a close relationship with someone and a good working relationship, then you can just work outside the normal aspects.
For sure.
I try not to bother you except for when it's really important.
Well, we win deals like that.
Yes.
Right.
Yes.
And the other people competing for that house might be at a traditional bank. They can't get their pre-approval letter on the weekends. They can't find out, where's the rate today? What is my payment here? Because the payment's going to fluctuate based on the rate, based on the property taxes, based on the offer price, based on all that stuff. And that helps us to be able to move quickly. Because if you've got 3-4 people competing for the same house,
right,
having that underwriting approval, having the pre-approval letter at 8:48 on a Saturday night is sometimes the deal sealer.
Yeah, it sure is. And/or having you communicate with other realtor over the weekends too is pretty important. So I 100% appreciate that. So thank you so very much for being available for me.
For sure.
And I'm there for you too.
Yes, for sure.
But it does take a team atmosphere for sure. So if you are thinking about buying a home remotely or you have lender questions, please reach out to us. We would love to help you. And if you have some topics or maybe some questions you would like to add or ask us, you can put it into the comments. We would love to get back to you and answer some further questions. But the moral of the story is, if you have a goal of owning a home, I would encourage you to reach out to a lender and do fill out the application. Even if it's like a 2-year goal, you can update the application, you can update things, but it's so much easier working toward a goal when you know what the goal is.
Yes. There's no cost. There's no commitment. It's just kind of research. Front, right?
Yes.
And if they never buy a house, that's fine too. Or if it's 2 or 3 years down the road, sometimes it's in 3 days they're under contract, and other times it's multiple years, and that's totally fine.
Yes. And we've recently had some clients like that. I think it was maybe 2.5 years that they ended up purchasing that property. And the beautiful thing was that they only had to go in and update and only had to give you like the most recent year of the W-2s and the most recent pay stubs.
Yep.
But then we were out shopping, and then there were some people who found something very uncustomary, and then you did your deep dive private eye detective stuff, and then we're challenging the VA. And we had to ask for an extension on closing, but we closed a transaction I never thought in a million years would be able to close.
That was a fun one.
That was a fun one. Yeah. But you did a lot of reading and research on that one. So thank you.
Yes, you're welcome.
And I just checked in on them. They're so happy with their house.
Oh, good.
They're like, they're in love with it.
I've been thinking about them, wondering how they're doing.
They're happy. Their husband was awesome. Deployed again, but they had said that he was so thankful to come home to that house. So that made my heart happy.
Yay.
Yes.
That's awesome.
That's when we know we're changing the world in a better way.
For sure.
Yes. So again, if you have any questions about loans, or maybe you want to ask Traci a specific question, please do reach out and ask. And we are open to suggestions for more topics. And we just survived our very first podcast. So thank you for joining me on that.
Woo! Let's go.
So real estate is our game, and lending is the game, and just ask some questions and we'll answer away. Is that good?
Yeah.
The end.
Was that amazing? We're amazing.
Amazing.
Amazing. Ooh, ooh.
Let's go.
Getting stuff done.